Well, thank you, and I'm glad to be here. And I've known Pete Kellerman, like you said, at least 10, 12 years. And Pete, I wrote a book, and I'll get through and show you which one it was. And Pete actually was the man responsible for, I think, what the word would we say, folks, is back test is the professional way of saying it. I think it's, and Pete and I always joke and laugh back and forth about, I think he was just trying to see if I was full of it or not. When I was talking about dojis and shooting stars acting as the high and the low on an intraday basis. And so Pete actually sat there in one of my seminars and did a little back test study. And the results, as I recall it, he walked up to me during an intermission, and he was very kind of like, I wouldn't say you were standoffish, Pete. I would say you were just kind of just professional, and you just said, I kind of back tested what you were talking about. And I don't know if you want me to share the results. And I was like, hey, they are what they are. Go ahead. And he didn't tell me what they were, but he said, he goes, well, actually, if you want, I will share them with the audience. And they're kind of amazing. I said, really? And so we ran with this backtest study to find out what the percentage of times the highs and lows of the day on an intraday basis was that the market came within the actual low of dojis, hammers, and shooting stars. And we did it on various markets and the currencies. And of course, the only reason we did it on the Canadian dollar, Pete, if you remember this, is because you like trading the Canadian dollar. And we did it on the
I love the Canadian dollar.
I know, that's why we did that with the Canadian dollar. So we threw that in the book. People are like, of all currencies, why the Canadian? We didn't do the Aussie. We did the Canadian. And it was because Pete Kellerman liked trading the Canadian dollar. We did it on the S&P 500 and the Dow and gold and the bonds. And, the results were all very similar and striking. And that was the first time anyone got together to do a back test study. And I know there was another guy, Tom Bukowski, but I don't think Tom's work was as sufficient in looking at reversals. And he did it on all candle patterns. And I don't believe in doing all candle patterns. I'm looking as a trader for high probability reversal. And so that's where we came about with that back test study. So Genesis and John Person and Pete Kellerman and Glenn go way back. And we've done quite an amazing feat together in the field of technical analysis. So it's not just John Person. I had some ideas, and they came to life because Glenn and Pete said, "Hey, we kind of like what you have to say, and we can help and automate this." And so that's where we come together as partners. This is an important risk disclosure. Just to let everyone know, past performance is not indicative of future results, and there's no warranty of profits as of a result of using any of these methods. And if you take a second to read over that, that will be important. And we're going to move on. So I'm going to be here for you guys, and I'm going to hold off any questions until the end. So don't type them until we get to the question time period, because they may get lost in the shuffle, so to speak. So just hold down, just hold off, and just don't forget your questions. Just jot them down. And I do hope that this presentation serves you well. I thought this would be cute. I took this photo, and it's a great way of saying just hold off the questions, just be quiet. That is actually my wife, and she was a marshal at the Honda Classic here this year on the 17th tee box. So she was all thrilled. She loves golf, and I took that photo because we've been married. We're going to celebrate 27 years of marriage, folks. And she was so qualified for her position. Think of this in this content. She's been telling me to be quiet and to shut up for 27 years. She was overqualified to be a marshal telling the crowd to be quiet. She got a little sign out of it. She wasn't able to take that home with her, maybe next year. But anyway, I found that to be kind of funny. You're not. She was right in the midst of taking action. The book here that we were just talking about is Candlestick and Pivot Point Trading Triggers. I can't believe that book is already 10 years old, and that's the one that Pete and I did the research and formulated all this information with the candles and pivots. And that's what really popularized a lot of the pivot points and doji formations. And of course, we dubbed a variation of a morning star and evening star formation called the high and the low close doji. We also had several other patterns in there, the last conditional change, and there were a lot of others. This book here, Mastering the Stock Market, this actual book was awarded the Best Investment Book of 2014, and a lot of the indicators that I'm going to share with you today can be found in that book. In fact, Stock Traders Almanac, and I'd have to say with Pete, he could go on and on about, when you've been in the business as long as I have, and you meet and know a lot of really outstanding traders in the world. One of my pinnacles of success, I would have to say, is that Stock Traders Almanac bestowed and dedicated this year's 47th issue of the Stock Traders Almanac to me for the field in technical analysis. And I was also voted member last year into the APTA, which is the American Association of Professional Technical Analysts. So these are some really outstanding dedications and some accolades that I'm proud of for my work. So the question begs, and what we're going to discuss today is the spring opportunities as we just launch into this tumultuous time period for the markets. There's a lot of things that change, and we're going through changes. We just ended the first quarter, and we enter the second quarter. Many of you have heard the phrase, sell in May, go away, but no one ever said it's the 1st of May, and not all stocks and not all sectors go down all at once, and we're going to discuss that and really get down to the nitty-gritty and what tools can we use to make better trade decisions instead of what maybe might be the norm. So I always like to use this slide. Has the ship sailed? Did we miss the boat? And I got to tell you, quite frankly, this is kind of an interesting concept, but you may have missed the boat, but maybe that boat because it sank. This is actually a sad story. This is the HMS replica of the Bounty. I don't know if you remember, a couple years back, it was making way towards the eastern seaboard and got caught up in a hurricane and lost a crew member. I think even the captain died. But this was in Chicago at Navy Pier. We took this photo in here of the Bounty, which was a magnificent replica vessel. As I'm actually a direct descendant of the Fletcher Christian, the guy who started the mutiny on that, which was played by Errol Flynn. But in any event, that's why we had that photo. But I don't think you may have missed that boat, but certainly not trading opportunities, and certainly not in some stocks or sector ETFs, and that's what we're going to discuss today. And I think there's certainly going to be times for stock players to hedge using inverse leveraged ETFs, and we'll go through some of those names. More importantly, I think it's the tools we use to analyze the market that may make the difference for you in your trading. And that's what I want to share with you today. What are these special tools? Many people are looking at Bollinger Bands. They're looking at CCI. They're looking at MACD. They're looking at stochastics. And I really can't see the questions, but I would right now, Pete, if you could help me out. How many people struggle with volume histogram? How many people look at a trend of a market and the volume histogram says one thing, but price action dictates a different move? Has anyone had that issue?
Yeah, let me have everybody who has had the issue do a raise of hand. There's a little button to raise your hand. That'll actually give me a count. Otherwise, they're just going to all type yes, and I'll have to manually count it, and I'm lazy. Let's see. Oh, you're getting quite a few hands. Quite a few hands coming.
All right, so basically, yeah. I've done some...
30 or 40.
So people have struggled with the volume bars, and I think the logical explanation, and here are the tools that I use. Number one, first and foremost, I've used seasonal analysis when I first started. Many of you may not know this, but my personal mentor or first boss in the business was George Lane, who was the innovator of stochastics. He didn't create it per se, but he was one credited with popularizing it. To be honest, and Uncle George, as I finally referred to him, everyone called him Uncle George. He looked like a cowboy in a kind of Santa. He looked like Santa Claus in a cowboy outfit. Really, he had this great beard, and he was just so flamboyant. He was such a great guy. But I really got a good lead about the markets and trading because he traded off the screen and he traded technically. And first thing he taught me was to look at 5 and 15-minute time periods for trading. And the two favorite markets he used to trade was live cattle and soybeans. But I had other notions and I had other aspirations, and I was more intrigued with the financial markets. And I departed George and went off and started to learn to trade the treasury bonds. And then when they developed and introduced options on the Treasury bonds back in 1984, it was like a match made in heaven. So the technical tools back then I still use to this day. Looking at seasonal approach for the markets. Back in those days, if you didn't know that the spring and fall cycle of the grain, the harvest lows they call them, if you didn't know certain times of the year feeder cattle and live cattle went up and down based on supply and demand functions, you really lost an edge in the market. But I learned from that, being in the industry and being, on the floor and around other great traders. So seasonal analysis has always been an integral part of my studies, and that's why I contributed. Actually, and here's a quick little bit of history. I was approached to do and contribute to the Commodity Traders Almanac, and I really had no interest in doing the book whatsoever. And it was actually Glenn Larson, the founder and owner of Trade Navigator, Genesis, and I went up to Glenn and I said, Glenn, I'm going to need your help with this, and because I don't really want to do it. He goes, yeah, we can help you. And what we needed to do was to put some of the graphs and some of the functions and some of the data together, and that's how we started it. If you look back from 2009's issue, you'll notice that every chart in that book was Genesis Financial Trade Navigator with the seasonal aspects and the historic data bank. So we really have done a lot of work together, Trade Navigator and I, and especially Pete. So Pete wasn't joking when he says, we've been around and we've worked together, and actually we have traveled in Europe together. So it's been a great ride. Seasonal analysis, I've taken the work to not just stock indexes, but stocks, stock sectors, commodities, and Forex, and it's all applicable as I've shown in years past. I also like to look at relative strength comparative analysis, and I think that's incredibly important. In the commodity world, folks, we call that simply spread trading. And you take a look at corn, wheat, cattle, hogs. Take a look at cattle, feeder cattle. More importantly, you can take a look at what sector is outperforming another. So I'm going to also divulge with you as far as if you're coming and entering in a seasonally strong period of time, then I want to measure one sector, or if I think, for example, the internet stocks, the XCI, should enter a seasonally strong period of time, which, by the way, oops, cat's out of the bag. The XCI does enter a seasonally strong period of time as of this week, and it's one that has had a major knockdown with a lot of components in there, anywhere from 20 to 40% of some of these names off their highs. Facebook, for example, Amazon, for example, Pandora is another stock. If you take a chart, I'll go through some of these with you in just a minute. But we want to look for names like NVIDIA. We want to look for names like Cirrus, Logic. Are there stocks out there that still look reasonably well from a technical standpoint? And if they are entering a seasonal strong period, is the money going into that sector? And if so, how can we determine that? I'm sure everyone could say, gee, that would be important information if we had kind of like a living, breathing entity type of an indicator that could show us if one sector's outperforming others. And we do, and I'll share that with you in just a minute. Indicators I use, it depends on the market. Specifically, I use a specific volume indicator which is older than me, or not older than me, actually. It's older. It's been around longer than I've been in the business, and I've been around a long time. In fact, it's called on balance volume indicator, and anyone can use it, and it's one of the, it's right in Genesis indicators studies. I like to look at that more so the volume, and many of you raised your hand saying you've struggled with volume. And if you have, you've got a good right to say that, because volume, I think, has been masked due to since the advent of A, ETFs, B, more options ability of large players. Instead of diverting and going into the main underlying market, they simply divert their trades. They can do synthetic long positions, selling a put, buying a call, and that volume's not going to show up in the market. But you can't hide the volume of an up day versus the volume on a down day on a comparative level, and that's where on balance volume comes in, and it'll help you to determine the trend of the market a lot better than it will, say, on the histogram volume, and I'll share that in a second. I also use advanced decline comparative ratios, and I use that on all the stock indices. I also like my own moving average proprietary settings. I have the person's pivots in multiple time frames, daily, weekly, monthly, option expiration, and quarterly basis. And of course, I look at momentum. Momentum is measured by closing prices. So these are the indicators and studies that I use. I think now once we've identified an opportunity, now we've got to explore the risk reward. And that'll help you to determine a position size. I would say if you're a stock trader or a commodity trader, once you identify that you are coming into an opportunity, now you've got to say how much money do you want to commit to the trade. And there is money management rules that I think there's been a lot of people that have studied and talked about it. And overall, just a general guideline. If you used, like, say, 2% of your overall account risk per trade, especially trading stocks, if you have $100,000, for example, 2% is $2,000. So if your risk on a stock is $2, then you determine by dividing the $2,000 into the $1, how many shares of stock should you be in? And that formula will kind of help you gauge what your share size should be. So obviously, if you have a $60 stock, a $30 stock, a $10 stock, it's not based upon the value of the stock. It's based upon the risk value that you should determine your position size. That's more appropriate total risk management and position size management techniques. Now we just got to determine, what would work best. If it's a capital-intensive stock, such as like Apple or Amazon, I mean, $500 a stock's a lot of capital put down for a single share, let alone 1,000 shares. So maybe you look at an option strategy. What type of option strategy? It depends on the outlook, what the seasonality is, and what the strength of the undertone of the market is. Maybe you do a credit put spread in a bullish to neutral strategy, or maybe you use what we call a stock replacement strategy. So there are different ways to enter a trade, and it depends on the flavor of what you're looking for. If you're looking to day trade, swing trade, position trade, I think everyone has had problems entering the market. Entry tactics are very important. How many times have you placed a limit order, watch the market pull back to your number? You're trying to buy the S&Ps at a quarter. They go half, they trade down to a quarter, quarter half, quarter half, quarter half. The next thing you know, they're 3/4 and it's off to the races and you didn't get filled. So using limit orders are important. Market orders at times are important. And then sometimes we like to use stop order entry techniques. Like when we're looking for the market to break out in a particular direction, we can stop ourselves into the trade and let the market carry us into the position. So the first thing I'd like to share with you is a relative strength comparative analysis. And this kind of looks silly, but let me just share with you on my chart page. And by the way, all these pages here, which is really neat, which is one thing that Genesis has done, is just an incredible. I mean, once again, they just knocked the ball out of the park. I can, for all the people that use my stuff, anywhere where it says JP, 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 all this stuff, if you take a look where it says JP, RS, analysis, and spread, there's 8 graphs here. So let me share with you this particular graph. This is just one function. This is a relative strength comparative analysis based on a percentage. And I know there's a lot of squiggly lines here, but they're color-coded. As you can see, they actually look at all the different top sectors. This is the XCI. The XCI, if I go back over down here to edit, and I can turn any of them off or I can turn them on. This is the Internet Technology Sector Index. We have the S&P 500, we have the builders, the ITB, which is more like Toll Brothers, the actual builders, home builders that is. The KRE, which is the regional banks, IXTC, which is the telecom. We have the XRT retail, the SOX, which of course is the semiconductor index, IYT, which is transportation, XLB is material, XLE is energy, and XLF. Now, friends, I want you to, many people might not know this, but I know we don't have a lot of time together, but I do want to go over, if you're trading stocks, if you're trading the S&P 500, many people look at the NASDAQ and they say, gee, the NASDAQ's leading the market. Well, you better understand what's the components in the NASDAQ. And you better know what the components are of these sector ETFs. The XLF is not a pure bank financial exchange traded fund. What the XLF represents is a diversified ETF on financials. In fact, It has the Chicago Mercantile Exchange, which is a commodity exchange. It has MetLife, which is an insurance company. It has American Express, which is a credit card. It's not a pure bank play. There are other ETFs that measure just the banks. And which banks? Large conglomerate banks like Wells Fargo, Citi, and Bank America. Investment banks like JP Morgan. There's different classifications, or regional banks, which is what the KRE measures. So I think you just need to do a little bit of homework to find out what each and individual one of these sectors represents. And here in this orange we have industrials, technology. So the XLK, we want to break down a subsector of XLK and take a look at this baby blue or light blue XCI index, because that's actually one that really starts to kick into gear. And I've got it measured right here. It's almost unchanged for the year. In fact, we have another index here, the SOX, the semiconductors. In fact, the semiconductors really starting to gain some traction since, as you can tell, I've started this since the beginning of March. So month-to-month measurement. And I like to look at month-to-month measurement as well as quarter-to-quarter measurement. Right now, look at the leadership from the month-to-month. We have utilities leading the charts, the XLU. And since the beginning of March, the XLU is up 5.69%. Leading in second place is the semiconductors. Let me tell you something. The semiconductors start to enter a seasonally strong period of time, as does the telecommunication as well as the internet XCI. So I've got my eyes on this, and I want to start to see if this starts to go up. Notice where this olive line, can you guys see this olive color right here? Notice where it's going down, and some of these other sectors are starting to go up. So if I'm bearish one market, I want to see it go down. And what is that? XLV, healthcare. Why do I bring that to your attention? Well, real simply put, one of the reasons I like to look at that, and I'm going to go over here and say, okay, this is a bearish inverse ETF QID, and it revolves around, as you says here, the ultra short Q, the nice, at the ultra short Qs, which is the reverse of the QQQ, which in essence is the NASDAQ 100. So this is the NASDAQ 100, and it's had quite an amazing move to the downside. But what a lot of people may not realize is if we take a look at the NASDAQ 100, and I want to go down to the NASDAQ 100, what people might not realize is that typically from a sector analysis, I want you to start looking at what's within the NASDAQ 100. And Genesis has this all listed for you guys. Here are the top stocks in the NASDAQ 100. So Amgen's in there. We have Biogen in there. You're going to see all the big names from biotechnology. The funny thing is, healthcare and biotechnology actually peak out in March. That's what weighed in on the NASDAQ. Now, we also had some of these high flyer momentum stocks like your Facebook and a lot of other names that just finally caved in over the last 2 days. But what really gave a really big dent in the NASDAQ was the weighing of course, the biotech names. Now, I don't think that I don't want to get too esoteric, but I'm just sharing with you there are ways to measure the market, and there are certain indicators that you can use. When I talk about what other indicators, I'm going to go over here where it says JP indexes, AD and OBV. So let me just go over here and share with you a page that I've created, another page, and you go, oh my goodness, what did this guy create? What is going on here? Well, it's real simple. I've got the top 5 stock indexes in this market. The first one is the S&Ps. The top shelf here, or the top row, is daily chart. The bottom row is weekly. So what I have here are a couple things. The S&Ps, the NASDAQ, the Russell, the New York Stock Exchange Composite Index, the NICE, and then the Dow. Now I want you to take a look at the middle window. It says ADCSP. That's the Advanced Decline Comparative Ratio for the S&Ps. This is ADCND. That's for the NASDAQ. This is for the Russell. This is the Advanced Decline Comparative Ratio for the NICE, and this is the Advanced Decline Comparative Ratio for the Dow. This is on a daily basis, and this is on a weekly basis. Why is that important to me? Because most of these indexes are capitalized weighted. And if the NASDAQ, for example, has had such a tremendous sell-off, so let's take a look at this real quick. And then I'm going to throw up, if you notice, I don't have volume histogram here. So I'm going to throw up the volume bars for you, and I'm going to get rid of the Christmas lights. And people said they've really struggled with this volume histogram. And the funny thing is if you take a look, if you're looking at a weekly chart, you'd say, well, you know, during this time period, the volumes actually moved lower. But this little indicator here, the blue line's going up. And guess what's happened? At the same time, the price kept going up. I mean, I could go through over and over and over and over and over again different examples, whether it be gold, crude oil, or stocks, of why we see multiple times that the volume histogram bars are duping people out of trades because they don't see a movement of price in concert with volume. But the on-balance volume indicator actually measures the volume of up bars versus down bars, and it can give you a better gauge of the health of the trend of the market. I think it's a better tool in this environment that we were in. If price is going to go up, it should be preceded by volume, and it doesn't show you that with volume histogram bars, but it is and can show it to you with the on-balance volume indicator. All right? So that's one that I wanted to share with you. Number two, it's funny because if you go back over here and look at the seasonal tool, typically notice that the NASDAQ, it specifically targets NASDAQ, tends to peak out on or about the week of March 22nd. So if you're not on guard for a sell-off on or about the week of March 22nd, you've got a kind of an issue, right? And then you got to be aware that what is the sectors that might weigh on this market. We had this actually pegged with our students, and what we've been talking about is that the biotech sector, beware of the biotech sector, and it was the first to cave in this whole move on the NASDAQ. It was the first to go down. The funny thing is, look at this extreme trend reversal that we see. That's why I got this black arrow up here, because typically the NASDAQ bottoms out on or about this week, right now, the week we're here together, this week. So I'd have to say, when I look at this chart and I go, okay, what is person's pivots looking like? So I just clicked on a little tab up here. It says JP Quarterly Pivots. So I like to take a look at the quarterly pivots. And quite frankly, if I get rid of some of this other stuff, we're actually near, see that green line right here? We actually came pretty darn close to the potential low for the month of or for the quarter, actually. And when we take a look at the monthly, we have a confluence that the monthly pivot, that's exactly where the market is trading right now. The next area that I wanted to explore with you is the advanced decline. On a week-to-week basis, the market has seen a nice decline from the peak that we made in the week ending March 14th. Actually, it was the high of March 7th. So we have seen from peak to trough a nice correction. In fact, we just go and say, okay, what exactly are you talking about, person? And we could just go over and use this little line tool. And we could say, here we have approximately a 6% correction from peak to trough in the NASDAQ 100. Most of that did not just happen last week. It's been developing, so it's nothing new. But if the market is truly and purely weak, the funny thing is, this advanced decline analysis hasn't shown that we've seen significant deterioration in the 100 stocks. It's just a few weighted sectors and stocks that have dragged this index down. If we start to enter a seasonally strong period of time, it might not be the stocks that are in the news. It's going to be certain stocks in a specific sector, mainly the XCI. So let me introduce to you, this is what we kind of do in our trading room every single day. This is actually, we start off with a positive thought. We talk about what reports and events are important, what earnings are out. We are entering earnings season, what a weekly high close doji is, and then April seasonal sectors. Strong, these are the strong sectors for the month of April, And these are the week. You'll notice DRG. Actually, GDX is the gold miners. So cow, which is an ETF on actually cows and feeder cattle. So the dollar index. In fact, if you look at the Japanese yen, big move today. So the dollar, the Dixie, actually has a seasonally weak period during April. Anyway, these are some of the things we do. But what I wanted to point out to you is here are some of the XCI top component stocks right in here. Funny, Facebook, because we went over this. Facebook, Google, Hewlett-Packard, IBM, Juniper Networks, Motorola Solutions, AMD. AMD, if you take a look at today's, or if we take a look at the market, you'll notice that the semiconductors also, which is in that group, the semis had a big move. Intel had a big move today as well. And so there are, not all stocks are going down, I'm here to tell you. And that's what these indicators share with us. And that's why we like to look at this to get a better, truer picture of the market. If you've been struggling with that volume histogram bar, there's no doubt that you're not alone. A lot of people have. So two things. A, when we get an idea that we're in a seasonally strong period of time, I want to measure if the sector is starting to outperform. And as I showed you a live chart rather than a canned presentation, I also want to take a look at what I feel is very important, is that if we start to see a market reversal to the downside, like the top is in, like just throw the bathwater out with the baby. Just throw everything out the window. The top is in. I'm going to tell you, when the top is in, we're going to get some significantly overbought readings in the McClellan oscillator, and we're also going to get a trend move of the spread differential between the NASDAQ and the S&Ps. So let's go back over here together. And again, we're going to go over to our RS analysis. And let's take kind of a gander of this. So we have that right over here. And I can tell you that while this spread relationship, typically when it's trending up, it's really hard to get significantly bearish the market. It's more important that we take a look at the weekly McClellan oscillator reading. It's actually neutral. Now, that might signify that certain stocks and certain sectors could recover from here. And I'm going to bet that we still have several strong sectors. Energy is one. Crude oil. Crude oil just moved up. The refineries should do well still. So that would help support, that sector will help support the market. And more importantly, what happens if we get some of these internet stock names to perform with the market that have lagged? Let's take a look at MCI, just for example. I know it's the, excuse me, wrong stock. MSI, excuse me. This is Motorola Solutions. I don't expect it to really go anywhere, but boy, it certainly hasn't gone down. It's actually, as you can see here, I want to go through some of these names. The volume action is a lot healthier than the price action. Let's take a look at Facebook. If you're a stock trader, then if you take a look at Facebook, I don't know what this volume histogram tells anybody, but I can tell you this. The shorter term, we just came down to fill in this little gap in Facebook, and more importantly, we're off about, as you can tell, from peak to trough, approximately 23%. Here's a funny thing. I throw up the monthly person's pivot. Guess what? We came within a real short, as you can see, just came pretty close to it in our monthly pivot support. And typically, if this is a stock, as you can see, the volume action here, and I want to change this to a weekly chart now. So the volume action, if this market is truly bearish, number one, I think we're going to start to see more erosion of that on-balance volume indicator, and we don't. It's still maintaining an upward bias. So I think there's a shot of higher prices coming for Facebook. Another one here I wanted to AMZN, Amazon, which is another one of these, the redheaded stepchild that got thrown out with the bathwater. The volume action, it actually did, as you can see. I don't know about this volume action, in this little upturn here. It was, if you compare an apple to an apple, So the volume's like, hey, the selling's, there's not much to the selling in here. But the on-balance volume said, hey, guys, this thing, it went down. Now, look what I've done here. To help clarify, is the volume deteriorating? Notice that I've put up a 21-day moving average. I can put an indicator on the indicator to help give me a better read of the market. So two things you could do. You could simply, because the on-balance volume indicator is a line chart, it prescribes itself to the theory of trend line breaks. If that's the case, then it should also use the theoretical notion of being applicable for moving average. If it breaks below moving averages, then it's obviously getting some liquidation. It's not accumulation. So with Amazon, it's actually a stock that right now is pretty close to an oversold level. The volume, to me, though, suggests that you might see a small uptick, but it's going to take a lot more to the upside. Amazon's not one that's in the XCI space. So I just wanted to share with you what is making the market tick, what sectors are moving. When you take a look at, for example, the biotech, and that's what I wanted to, at least go over a few names with you real quick. Notice that this is Biogen. Biogen, right in the middle of March, right when it should, it started to collapse. So it weighs, and as I shared with you earlier, guys and girls, ladies and gentlemen, there's Biogen. It's part of the NASDAQ 100. What about Amgen? Amgen, it peaked out as well, right on or about the 19th, the 21st. It followed suit. So a lot of these biotech names actually did fall when they should have, and it weighed in on the market. So we have a lot of other names like Checkpoint Software. Checkpoint Software, big reversal today. In fact, where do you see a major sell-off here? This volume action speaks kind of well for Checkpoint Software. It's closer to its yearly highs than it certainly is its yearly lows. And this is just another example of a name that we could see some more upside. NVDA, NVIDIA. I don't know about you, but this doesn't look anything like the overall stock market. And by any stretch of the imagination, this is actually, if you take a look at the volume action here, this is not telling you to be short the market. And again, a great example of, I don't know what this volume histogram bars is helping you with, because I don't get anything out of the volume bars. But I can see that as price is moving up, it's moving up. When it goes up on stronger volume. When it goes down, so let's take a look at this day. Let's compare an apple to an apple. When it goes down, notice that the volume histogram is making a higher low. If you were actually trading this blue line as a price line, if volume precedes price, then guess what? If volume makes a newer high, then price should make a corresponding newer high. I think that NVIDIA is one that is obviously defying the force of gravity of the overall market. So I'm here to share with you, this market is making sense. And the stock market has been going through what we call a sector rotational grind. And that's where the tools that we've disclosed with you so far, whether it's looking at McClellan oscillator, looking at the measurement of the market internals, whether it's looking at the advanced decline comparative ratio line, and as well as looking at seasonal and sector analysis, it really has helped us, and that's what we call the top-down approach. So we can use this for sectors, and we can use it even for the commodity trend. We can find out whether or not where the leadership of the group is coming from. Now, PPS indicator stands for Person's Pivot Study. It's just something we dub for our proprietary buy and sell signals. So if I go over here and I go to, let's go to seasonal and on-balance volume. As you can see, I'm really big on using the on-balance volume because, as you see on your right, we have daily charts with the seasonal trend. And when we set up our weekly charts, and what I have here on my daily charts is I like to have my monthly pivots. My weekly charts, I like to have my quarterly pivots. All right? In addition, I also like to see what is the seasonal trend of this market More importantly, let me go over here, and I'm going to scroll down, and I'm going to turn on balance volume with a moving average component. So if I'm looking at a stock, which for the record, I am long Ford at lower levels. In fact, here was, if you know my work, some of you may not realize we have a high closed doji. What this is what we call the PPS buy signal. This green arrow is a buy signal. The orange is a sell. Typically, what we like to do for stock and for longer term trading is when we're in a weekly buy, and as you can see in Ford, we generated a weekly buy at the week ending March 7th. So the momentum indicator, this green arrow, gave us an indication that this stock generated a buy signal. It was actually weeks earlier that actually towards the middle of February that the market generated what we call a weekly high close doji. The market closed above the high of that doji. That triggered actually a bullish response in the market. Typically, Ford has in the consumer discretionary, if you have so much cash and things are getting better, you buy a vehicle, you buy a house. Ford has a seasonal upturn this time of year. If the price of the stock is actually going up, I want to say, is it going up with an accumulation in volume? And you can clearly see, while it's not making me rich quick, but the stock is working for us. It is going up. Where is this volume histogram helping people? You see what I'm sharing with you? So the fact is, we are seeing more of an accumulation, and you get a better indication of a trend of the health of the market. What is the trend of the market? And is the trend of the market going up with a rise in volume per the on-balance volume indicator? So basically, there are several tools. Everything that I disclosed with you at the very beginning of our presentation, what do I do? How do I create things? Where did I put my stuff together? Obviously, if we're at a seasonal turn in the market where the market goes down, if I was running a scan, which, by the way, is something that we've created, we can run a scan for, and just to share with you, if we want to go just for information technology, some of the scans that we've created are really absolutely over the top. And this is the only platform that we have this amount of scans. First off, I want to know, do we have weekly low close dojis in the S&P 500? You know, after last week, only one name popped up as a weekly low close doji. It was O'Reilly Automotive. And there's no way I want to sell that market because from a seasonal perspective, it actually starts to go up towards the middle of April. So I'm not going to take that. But if you take a look at how many stocks gave us weekly high close dojis, wow, look at all these names that populated even after last week's move. So if you don't know any of these names, what's really cool is that we can go down and we've put it down to where we can find what are the stocks. We generated last week, 22 stocks generated weekly high close doji signals. Out of that, 6 of them were in consumer discretionary sector. Best Buy. I mean, who goes to Best Buy? Well, it's been in a weekly buy, as you can see. The volume isn't really participating because the seasonals actually isn't really there. This is one that I wouldn't really be interested in. Ford. Oh, wait a minute. I'm already in it, but it did generate a high close doji. That makes me feel pretty warm and fuzzy. So I could say, okay, here we might see a little bit of correction in the market. We're near monthly pivot. Quarterly's way up here at 1670, and we have a seasonally strong period of time. Maybe we just stay with the trade, lighten up our load a little bit, raise our stops. Here's one. It's a home builder, Lennar. Lennar actually doesn't really have a lot of seasonals to it, and the weekly on-balance volume is not promising. I would not be touching this. So going through the list, we have Macy's. Well, Macy's does have an upside. Macy's actually looks appealing on a pullback here with all of this nasty move in the last week or so. Actually, Macy's might see a surprise to the upside. As you can see, if it's not Macy's, maybe there are other stocks in that sector. They're competing stocks. So let's take a look at Kohl's. Kohl's doesn't interest me. Nordstrom. There's a competitor of Macy's. Actually, Kohl's had a nice kind of reversal here. And look at the on-balance volume indicator, friends. If you were trading this indicator, the blue line down here, this actually looks more bullish than that price. Do you agree with that statement? Doesn't this blue line, if you were trading this blue down here, doesn't this blue, I mean, let's face it, it goes up, it pulls down. It makes higher highs, it pulls down, it goes up, pulls down, and it goes up and makes a higher high. That's fairly bullish. So if volume precedes price, then we may see more upside coming in Nordstrom. After all, we do still see seasonal tendency for Nordstrom to go into June to the upside. So perhaps we are just in a consolidation factor in the marketplace in certain segments. Even if I don't want to trade that, it's good information to know. Next, last but not least, I'm going to bypass Staples. I'll show it to you anyway because it's here on the chart. Staples actually generated a weekly high close doji. In fact, it's going to generate a PPS weekly buy signal. There's only one problem that I have with this. It's in a seasonally weak period of time, but the weekly volume looks fairly strong, according to the on-balance volume, and the daily looks really strong. You guys see this right here? So we have a little minor uptrend. Maybe there's, it has enough strength to fill the gap up in here, maybe get up into the upper 12 area, maybe another 50, 60 cents. But after that, I wouldn't really, I'm just trying to figure out where the best place my money can go. Now here's Target, which had huge problems with their credit card security. And I think Target actually could be a big surprise. By the way, I don't know if you realize in today's action, Target had a big reversal. It was up 1% today. This stock actually does look like it could be a surprise to the upside. From a seasonal perspective, Target actually looks like it has a better risk-reward parameter than Macy's. After all, it has, if it is going to break out, if it does break out of this down channel, then Target could really take the socks off of people and surprise a lot of people. We are seeing a little bit of an uptick in the weekly volume. So I just wanted to go through, are there tools out there? What does John Person use? How do I use for stock selection? What do I use for commodity selection? I think it's important to identify a product that can nail down, once you understand what makes something tick, what generates a buy and a sell signal. Is it near support? Is it a seasonal trend? Is there volume behind it? And I don't mean looking at the volume, because again, in all of these markets that I've shared with you, very few times have we seen the volume histogram match the component of the on-balance volume tool. So if you walk away together, together we separate our ways and you walk away and you never cross paths again. At least walk away with the knowledge of looking into using and utilizing on-balance volume more in your analysis. And I think you'll have a lot better success in measuring the health of trends of markets. In fact, let me go over crude oil real quick just to share with you a couple commodities, a couple things I'll put up here on the board here. And I will include, I think it'd be only fair, let's get rid of the Christmas lights here. Okay, so this is crude oil. It generated another high close doji. You got a little buy signal here on the daily. This is target still, CL2, enter. Let's try this again. Close enough. So same thing. We've got the high close doji. We're at monthly support last month. Crude oil's in a seasonally strong period of time. On balance volume obviously is showing a rise, whereas the volume is showing a decline. I mean, you can't make this stuff up. There it is. Here we have an indicator that, whether you get long the market or not, it actually would help you from selling short at the monthly support when we enter a seasonally strong period of time. In fact, it may even help you to say, gee, if crude oil goes up, what stocks are closely tied or correlated with crude oil? If crude oil goes up, who tends to make money? The drillers, the refiners, the guys that drill and refine, right? So Exxon would seem to make money. Valero would seem to make money. Devon Energy would seem to make money. DVN is a stock. We actually bought this stock, and based on that, look at this huge uptick in not just the daily on-balance volume. Sure, we had a couple up days, but then as the trend really started to get some traction, look at the volume does. I mean, so if you compare an apple to an apple, you would have been saying, oh, it's time to get out of this stock. Right? It's starting to lose the trend. And meanwhile, it just continues to move up. In fact, the same thing occurs on the weekly basis. Devon Energy has a very strong seasonal trend to it. In fact, we hit the quarterly pivot at the end of, or the end of January, the early part of February. So it really gave us not only that PPS buy signal. We run scans for this type of thing, and you can look for better opportunities in the market. That's what's really important in utilizing a platform or a study. Is it something that I can run scans for? Is it something, if you have the right scans to feature? I think that's what's really powerful in using Trade Navigator, because it's just so amazing that I'm able to take the ideas, construct my own analysis, my pivots, my specific pivots, whether I want to use quarterly or an option expiration. If I change this to, say, Google, well, Google's a bad example because of the split. So let's use Priceline, PCLN. I don't know if you guys like to trade Priceline, but if you look at option expiration, typically the market almost pins exactly to within the option expiration versus a monthly calendar. And so we've done a lot of really neat things with Genesis. As you can see, Priceline, more so, rather than looking at monthly pivots, it actually trades closer or tracks within its option expiration pivots more so it does its monthly pivots. These are just other features that John Person has created within Trade Navigator. Really amazing package, really amazing product. It just really helps to identify trades within the market. Here's, as we sit there together and look at Priceline, for example, from a seasonal perspective, it actually starts to have a little peak on or about the middle of around March 21st, and it goes down until about 4/11. Oh yeah, that's this week. So perhaps, and then we see another surge to the upside. We are almost forming a high close doji, by the way. It didn't do it today, at and near, as you might guess, monthly pivot support. So even Priceline, what I would need to see is I need to see a buy signal, and I need to see daily volume uptick. Okay, and then I'd be taking a look at Priceline even for a short-term trade to the upside. From a quarterly perspective, it's still actually in a bullish bias, because notice that Person's Pivots is targeting a higher red and a higher green for this next quarter. So things can change, but for right now, we're coming close to a value level in a lot of stocks in specific sectors. So am I bearish on this break in the stock market? And the answer is actually no. And we do and are scanning and looking for specific stock trades. I think that the market is, if it is going to peak out, and when I talk markets, let me talk S&Ps. This market on a monthly trade, you're not going to take from this last trend, and you take a look at this trend, and let me get rid of these pivots here real quick. You just don't roll over a long-term trend without some type of consolidation, or at least a monthly sell signal. You just don't roll over. It takes a few months of topping action. So with that said, we've had a rally that has contributed with strong volume on the on-balance volume indicator, right? We're not looking at a major catastrophe. The market's broken down. It just came right at monthly support. I mean, if anything, all I can say is that this market's actually in a range. The S&Ps are in a range. It's going to take a little bit more to get underneath the monthly support and these lows that we see in here in order for me to get bearish. But once that does turn, friends, Yeah, I expect a whale of a correction. There's just no doubt. And I think the ultimate correction might come sometime later in the summer. But for right now, I think we still play the upside of the market for the next 4 to 6 weeks in specific sectors, as I've mentioned. So I think that, we need to also be aware that, for whatever reason, 1422, many people may not remember this, but I think technicians will never forget. As we started the year in 2012, we left a gap in the market from 2012 to 2014. So there's actually a gap down here, and it doesn't show on a weekly chart, but on the spiders and on the daily chart, there's gaps down here at the 1420 handle. And you know what? If you take a look at it, that would be a disaster for some, but I'd be prepared for it. And I think it's going to come. It's just not going to come this week. And I don't think, not with that seasonal aspect. I think for sometime during the summer, maybe September, something happens. But I feel that the market still at this point in time has decent enough volume, and it still has this little sell signal could go away if the market doesn't close below a specific level. This is just a warning sign that we are getting a weekly potential sell signal. But the fact is, with the seasonal trend up and so many stocks still looking healthy, I think going from a top-down approach, it makes for two things. A, I don't get ultimately bearish the market until we close on a weekly basis and get below these levels. Other than that, all I can definitely say is what the charts tell me, and what the charts tell me and what my technical tools tell me is that this market broke out of these old highs, and these old highs is like a line in the sand, friends. Take a look. This is acting as support. That's all that's happening. These old highs are acting as support. So I can't really get bearish in the market because I don't have a lot of downside volume to constitute more aggressive selling, not just in the S&Ps, but also in the other stock indices. So I hope that was a good introduction as to what we use, how we use the PPS indicators to scan for buy and sell signals. I use my scanning features in Trade Navigator for high close and low close doji. And if we do, I will aptly tell you, for those that are interested, for the John Person lifetime membership, one thing that's really cool is that this gives you access to our 3 months in our trading room. Also, my advanced trading course. It's kind of like you're getting an incredible package. If you're interested, you just click on that link right there, Person Planet, or come see us. Our trading room and our lifetime Navigator membership, what it entitles you is complete information, coaching, teaching to everything that I have created within Trade Navigator. And you'll be in the room with us. We talk about it. Nothing's held back. In fact, these are kind of like our daily worksheet. We actually even post what to do, what potential stocks, or as far as day trading, what our earnings. I've already showed you what we've done for this week. If you're interested, certainly come visit us at personsplanet.com or give our office a call tomorrow at 561-655-1881. What happens with Trade Navigator, which is also really cool, let's say, for example, which this is what I don't know if I went over, why Genesis has gone over the top. So this is our trading room page for when we're day trading the S&Ps. And as it populates, I'll share with you a couple things that we were looking at today. We weren't looking to sell. We took a long position today and looked for a bounce off of monthly pivot support. When we take a look at the daily chart, we said, listen, we just had a monthly support down in here, which is this green line. This is the green line here. That's monthly pivot. It shows you right there. So basically, if I put in any annotation, any markings on my charts, so basically, typically we have, a 3-minute chart. We also said at this area, this will be their upside resistance zone. So what makes this cool is that, for example, if I say, okay, guys, I've written all my annotations for the day, all I have to go is to pages, and then I publish. If I hit publish, and I hit publish, and I publish this, right? Then my students and anyone that has the lifetime just goes to where it says load, and they get anything that I've written on the chart. It now becomes everything that you see on this chart. And again, this is a 1 minute of the S&Ps, the NASDAQ, the Dow, the Russell, crude oil, the Japanese yen. This is the bonds. This is the knob spread, which we were trading last week successfully, and gold. So this is the markets for day trading interest that we have. So if I write something on the chart or I put lines that I say if the market breaks out or gets down to this level, I upload it, you guys download it, and you have it on your chart. All these indicators, everything here is all created. Every page that was ever created that says JP, we've got grains, we've got meats. If you're a meat trader and you look at spreads. So we have all my proprietary indicators come with this. Every scan that I have, the high close doji, the low close doji. So we have all our cattle, front month, back month. We have our cattle spreads, our hog cattle spreads, our cattle feeder spreads. Every chart that was ever created, everything is in here. We do it for the grains as well. And of course, we even have our planning and scanning page, which is where we do our stock search. And we examine. So for the grains, I'm looking at beans, meal, bean oil. We have our crush spread. We have our corn wheat spread, which I've been very active in the past using. And of course, we look at our front and back month corn trade. So every single page that I've ever created is on the John Persons Navigator. And for lifetime memberships, you can take a look at that. Fabulous product, incredible technology through Trade Navigator to allow me to create anything I want using their tools, create my own proprietary indicators, my buy and sell signals, and to be able to upload and download that with my students and members. So basically, I hope you got something out of today's event. If anything, you walk away with looking at what relative strength can do for you, comparing if the sector enters a seasonally strong period of time, is that starting to come to fruition? Is it starting to outperform the other sectors? If so, you know you're on the right track. Then you can start to nail down the specific stocks within that sector. It's a very powerful way of analyzing the markets, giving you a better edge in the marketplace. And at the very least, at least using how to use the on-balance volume indicator. And that's something that's very special for those that have been struggling. I encourage you to study, read up on it. Joe Granville did not actually, he was credited for creating this. And we lost Joe last September. I think it was September 7th of 2013. Joe is now in the big brokers trading lounge in the sky looking over at us. But I think his indicator may have been ahead of the time. Who knows? I think that we are seeing a problem with volume as it was once written. If you go back to look at any of the old technical analysis books like Edwards and McGee, any of the books talking about volume, you'll kind of discover that, maybe they didn't have ETFs when they were writing about volume. Maybe they didn't have, of course, when they were writing about volume, optionable trades. And everyone now is using, a lot of hedge funds, and many professional traders are all using options. And maybe that's what's helping to mask the reason why volume is not working as well as it once did or it was written before. But I'm telling you now, folks, I think on-balance volume is going to help solve that problem or give you a better indication. Anyway, I want to thank Pete Tillman for allowing me to give you an insight as to the world of John Person and what I've created and worked together with Trade Navigator. And once again, if you have any questions or you want to say, hey, I'd like to see what this is about, you can certainly come visit us at personsplanet.com, and there's our phone number. You can call our office and leave a message, and we'll contact you back. Other than that, I wish everyone a great spring. Watch the XCI. Keep your eye on the on-balance volume, and make sure that if the S&Ps, if we need to see, for me to get ultimately bearish, if we close below that 1820, 1825 weekly low on a weekly basis, so on Friday or any Friday, we close below that low, I would say, listen, there's cause for concern, but we better see a major decline with that on-balance volume associated with it, as well as confirmation from the advanced decline, and that will give me further evidence that the top is actually in. As it is right now, I just don't have that evidence, if that helps anyone. I thank you so much for your time and Pete's time for helping me be here to present to you.
Hey, thank